We are starting a new unit today, and this is a unit on income taxes. And Oliver Wendell Holmes stated that taxes are the price we pay for civilization. And I like to quote a little bit from our textbook about this. It takes a lot of money to run local, city, state, and federal governments. The money collected through taxes helps those agencies fund police forces, fire departments, political officers, teachers, research, military defense, public assistance programs, and much more. Okay, so this is basically what we're talking about here in terms of taxes that we pay. And we're going to stress primarily income taxes in this unit. So section 6.1 is tax tables, worksheets, and schedules. And Albert Einstein once said, the hardest thing in the world to understand is the income tax. So part of what we're going to do in this unit is try to understand income taxes and how they're paid in the United States and how they're determined. The objectives of this first unit are to express tax schedules algebraically, to compute federal income taxes using a tax table and tax schedules. We have some key terms here that we really need to understand. The first of these is property tax. This is a tax based on the value of property you own. The next is sales tax. This is a tax collected based on value of items purchased. Then we have taxable income. This is the income that is deemed taxable. We have income tax. This is tax collected based on amount of income. We have the Internal Revenue Service, or IRS. This is an organization that collects federal taxes. Then there are certain categories of taxpayer. First, there is single. This refers to unmarried taxpayers. There are married filing jointly. These are married people who fill out one tax return together for the two of them. There's a qualifying widow or widower. This is a person who meets qualifications outlined by the IRS. There's married filing separately. These are married people who file two separate forms rather than a single form. And then there's head of household. This is a special filing status for certain unmarried taxpayers who support people in addition to supporting themselves. Then there are a number of questions that come to mind, and that is, who pays taxes anyway? Who are the taxpayers? What type of taxes are there? Do you pay taxes? Do your parents pay taxes? And what does the statement, your annual tax changes as your annual income changes, mean? So hopefully we'll get to understand the answers to these questions better as we continue on through this unit. So let's begin by looking at an example. Ron is single. He is using an IRS tax form and calculates that his taxable income is $51,482. The instructions tell him to use the tax table to determine his taxes. How much does Ron owe in taxes? All right. Well, first of all, we have to take a look at what we know from this example. First of all, we know that he is single, all right? So that does make a difference in terms of his taxes. And we also have to look at the fact that his taxable income is $51,482. Well, let's use these two figures and see if we can figure out what he owes in taxes. So if we look at the tax table, we see, first of all, that he is single. So he's going to use this column right here, all right? Next, we look for where is his income. His income falls in this range down here, $51,450 to $51,500. Then we go across and see in the column, the single column we picked for him, what his taxes are. And if we look there, we see that his taxes, based on his income and the fact that he is single, are $9,213. So this is how much he's going to end up paying in federal income tax. Now let's look at example 2. Maria and Don are married taxpayers filing a joint return. Their combined taxable income is $153,900. The IRS offers a tax schedule so that taxpayers can calculate their tax. Use the tax schedule below for married taxpayers filing jointly to calculate Maria and Don's tax. Well, we have to look at what we've got here. First of all, they're married, all right? And they are filing a joint return. And their combined income is $153,900. So let's use this information to see if we can determine their tax. So the first thing I'm going to do is notice that they are filing a joint return. So this schedule is for married filing jointly. Notice that's right here. And their income is $153,900. Well, it's within this range right here, between $151,200 and $230,450. So it's in that range. So that's the column, the row that we're going to use. So their tax can be calculated by taking $29,387.50, adding to that 28%, okay, notice plus 28% of the amount over $151,200. So the tax is equal to $29,387.50 plus 28% of the difference between their income, which is $153,900, and $151,200. So if we calculate all that, we come out with their tax is $30,143.50. All right, let's look at example 3. The IRS includes a tax schedule for information purposes only. For taxable incomes over $100,000, taxpayers must use the tax worksheet. Here is a portion of the worksheet for married taxpayers filing jointly, okay? Calculate Maria and Don's tax using this worksheet. All right. Okay, so the first thing they're going to do is look in column A. This is where they are to enter the amount from line 43 of the tax form, which is basically what is their taxable income. So they enter $153,900 in column A. So next, they take the amount in column A and they multiply it by 28%. Now notice, again, as in previous units, we always convert the percent to a decimal, so it's 0.28. So when you multiply 153,900 by 0.28, they come out with $43,092. So now they take the amount from column C, right, which they got, and now go to column D and they subtract $12,948.50 from column C, and they come out with their tax of $30,143.50 in this last column here.